Imagine waking up every morning, going to work, working 8 to 12 hours every single day, and still paying more tax than some billionaires. Sounds impossible, but it's real. A teacher, a truck driver, a nurse, an office employee. Many ordinary Americans pay a higher percentage of their income in taxes than some of the richest people on earth. Meanwhile, billionaires buy private jets, mega mansions, luxury yachts, and legally avoid billions in taxes. How? Is the system broken? Or was it designed this way from the beginning? Today, we're exposing the hidden world of billionaire taxes, the loopholes, the strategies, the secret tricks, and why the rich keep getting richer while the middle class struggles harder every year. By the end of this video, you'll never look at money, taxes, or the economy the same way again. Clapperboard Part 1. The Big Lie About Taxes. Most people grow up believing one simple idea. If you make more money, you pay more tax. That sounds fair. And technically, it's true, but only for people who earn salaries. The moment you enter the world of the ultra-rich, the rules completely change. Because billionaires don't live like workers. Workers earn income. Billionaires own assets. And that single difference changes everything. Let's say a normal worker earns $70,000 a year. That income gets taxed immediately. Federal tax, state tax, Social Security, Medicare. By the time everything is deducted, a huge chunk disappears. But billionaires? They rarely depend on salaries. Many billionaire CEOs officially take tiny salaries. Some even take just $1 per year. So if they're not earning salaries, how are they becoming richer every second? Simple. Stocks, businesses, real estate, investments, assets. And here's the important part. In America, assets are treated very differently from income. That's where the entire game begins. Clapperboard Part 2. The Secret of Unrealized Gains. This is one of the biggest financial secrets ordinary people never learn. Let's say you buy a stock for $1 million. A few years later, that stock becomes worth $10 million. Congratulations. On paper, you just made $9 million. But here's the trick. You don't pay taxes until you sell. That profit is called unrealized gains. And billionaires live off unrealized gains for decades. For example, if a billionaire owns company shares worth $50 billion, and next year those shares rise to $60 billion, they gained $10 billion in wealth. But legally, they may owe almost nothing in taxes. Why? Because they never sold the stock. This is one of the biggest advantages of being ultra-rich. Workers get taxed when they earn. Billionaires get richer without earning taxable income. And that's only the beginning. Clapperboard Part 3. Buy, borrow, die. Inside the finance world, there's a famous strategy used by the ultra-wealthy. It's called buy, borrow, die. And once you understand it, you'll understand why billionaires often pay so little tax. Step 1. Buy. Billionaires buy assets. Stocks, real estate, companies, land. These assets grow in value over time. Step 2. Borrow. Instead of selling assets, they borrow money against them. This is the genius part. Loans are not taxable. Let's say a billionaire owns $5 billion worth of stock. Instead of selling stock and paying taxes, they go to a bank. The bank sees their massive wealth and says, "Sure, here's a $200 million loan." Now the billionaire has cash to spend. Without selling assets, without triggering taxes, they use that borrowed money for luxury homes, private jets, vacations, investments, business deals. And because loans aren't income, no income tax. Meanwhile, their assets keep growing. Then comes Step 3. Die. When billionaires die, their heirs often inherit assets with something called a step-up in basis. That means huge capital gains taxes can disappear almost completely. Generational wealth survives. Taxes shrink. Families stay rich forever. This is one of the most powerful wealth strategies in modern capitalism. And most ordinary workers never even hear about it. Clapperboard Part 4. Why workers pay more. Now compare that system to ordinary people. A worker cannot borrow against billions in stock. A worker depends on wages. And wages are heavily taxed. Every paycheck gets sliced apart before it even reaches the bank account. That's why many Americans feel trapped. They work harder. But inflation rises. Rent rises. Healthcare rises. Food prices rise. Taxes continue. Meanwhile, asset owners become richer. This creates a massive wealth gap. And every year, that gap becomes bigger. The rich own appreciating assets. The middle class owns liabilities. One group gains wealth from the system. The other survives inside the system. Part 5. Capital gains versus income tax. Here's another reason billionaires often pay less tax rates than workers. America taxes different types of money differently. Salary income can face high tax rates, but long-term capital gains, usually lower. That means if a billionaire makes money from investments, they often pay a lower rate than someone working a normal job. Think about that carefully. A nurse saving lives, a firefighter risking danger, a teacher educating children may pay a higher tax percentage than someone making millions through investments. This debate has divided economists and politicians for years. Some argue lower capital gains taxes encourage investment and economic growth. Others argue it creates unfair inequality. But regardless of politics, the system clearly benefits asset owners more than wage earners. Clapperboard Part 6. The power of business deductions. Billionaires also own businesses, and businesses unlock another powerful tool. Tax deductions. Private jets? Sometimes deductible. Luxury cars? Potentially deductible. Travel? Meals. Offices? Consultants? Many expenses reduce taxable income. Now compare this with ordinary workers. Most employees can't deduct daily living expenses. Workers pay taxes first, then spend what remains. Businesses spend first, then pay taxes on what's left. That difference is enormous. It's one reason entrepreneurship creates financial leverage. The tax code often rewards ownership more than labor. Clapperboard Part 7. Offshore accounts and tax havens. Another controversial strategy involves offshore tax havens. Some wealthy individuals and corporations move profits through countries with lower taxes. Places like the Cayman Islands, Bermuda, Luxembourg. These regions became famous for favorable tax structures. Now, not all offshore finance is illegal. Many strategies are perfectly legal. But critics argue multinational corporations exploit loopholes to avoid paying fair taxes. A company may generate billions in revenue, yet shift profits internationally to reduce tax obligations. This becomes extremely complex. Teams of lawyers, accountants, financial advisors work full-time protecting billionaire wealth. Ordinary workers rarely have access to such financial engineering. Clapperboard Part 8. The psychology of the tax system. Here's something deeper most people never think about. The tax system shapes behavior. Governments don't just collect money. Taxes influence what society rewards. When labor gets taxed heavily, and asset ownership gets taxed lightly, people with assets accelerate ahead faster. Over decades, compounding creates massive inequality. A billionaire earning 10% annually on investments grows wealth explosively. Meanwhile, workers exchange time for money, and time is limited. This creates two completely different financial realities. One class lives from labor. Another class lives from ownership. And ownership scales infinitely. Clapperboard Part 9. How the rich use debt differently. Most people think debt is dangerous. For ordinary consumers, it often is. Credit card debt destroys families. Car loans create stress. Personal loans become traps. But wealthy people use debt differently. They use debt strategically. Low-interest loans allow them to keep assets invested while accessing liquidity. If investments grow faster than loan interest, they become richer using borrowed money. This is advanced leverage. The rich use debt as a tool. The poor often experience debt as survival. That's a massive difference. Clapperboard Part 10. Why this system exists. Now you may wonder, why would governments allow this? The answer is complicated. Supporters argue wealthy investors create businesses, jobs, innovation, economic growth. They claim favorable tax treatment encourages entrepreneurship and investment. Critics argue billionaires gain too much influence and avoid contributing fairly. Both sides debate constantly. Politicians argue over wealth taxes, capital gains taxes, corporate taxes, inheritance taxes. But changing the system is difficult, because wealth also creates political influence, and influence shapes policy. Clapperboard Part 11. The emotional reality for ordinary people. Now imagine a single mother working 2 jobs. She pays taxes automatically from every paycheck. She struggles with rent, medical bills, groceries, childcare. Then she hears that some billionaires legally paid little or no federal income tax during certain years. That creates anger, not because people hate success, but because people want fairness. Most Americans don't mind wealth. They mind unequal rules. That emotional frustration drives political division across the country. Part 12. The media, social media, and public outrage. Every few years, a report leaks. Headlines explode. Billionaire paid less tax than teacher. Social media erupts. People argue online. Some defend billionaires. Others demand reform. But the reality is often more nuanced than headlines. Many billionaires pay billions in taxes overall, especially when selling assets. However, relative to total wealth growth, the percentage can appear surprisingly low. That's the key distinction. Income taxes were designed generations ago, before modern billionaire wealth structures existed at today's scale. Clapperboard Part 13. The History of Taxes in America. Long ago, America had extremely high top tax rates. During certain periods in the 20th century, top marginal tax rates exceeded 70% or even 90%. But over decades, tax policies changed. Supporters believed lower taxes would stimulate investment and economic growth. Critics believed it mainly benefited the wealthy. This ongoing battle shaped modern America. Every election, taxes become a major issue because taxes reflect values. Who should pay more? Who deserves incentives? What creates fairness? Those questions never disappear. Clapperboard Part 14. How ordinary people can learn from this. Now here's the important part. This video is not about hating rich people. It's about understanding the rules. Because once you understand the system, you can think differently about money. The wealthy focus on ownership, investments, assets, businesses, cash flow. Many workers focus only on income. That mindset difference changes financial futures dramatically. The goal isn't just earning more. The goal is owning things that grow. Stocks, businesses, real estate, skills, intellectual property. Financial education matters more than ever because the system rewards people who understand it. Clapperboard Part 15. The Future of Taxes. The debate around billionaire taxes is growing worldwide. Some people want wealth taxes, higher capital gains taxes, corporate reform. Others warn aggressive taxation could reduce investment and innovation. Technology is also changing everything. Digital assets, cryptocurrency, global finance, artificial intelligence. The financial world is evolving rapidly. Governments struggle to keep up, and the gap between financial literacy and financial reality keeps growing. At the end of the day, this story is bigger than billionaires. It's about understanding the game. Because most people spend their entire lives working for money, without learning how money actually works. The rich aren't always smarter, but they often understand systems better. And systems create outcomes. If you only trade time for money, you stay inside the tax system designed for workers. But when you begin building ownership, assets, investments, businesses, you start entering a completely different financial world. That doesn't mean becoming a billionaire overnight, but it does mean thinking differently, learning differently, building differently, because financial freedom starts with financial awareness. And maybe the most expensive thing in modern society is not lack of money, but lack of financial education. If you enjoyed this video, hit the like button, subscribe for more deep finance documentaries, and comment below. Do you think billionaires should pay more taxes? Or do you believe the system rewards innovation fairly? See you in the next video.